Hello, you're watching Proactive. I'm joined by AJ Bell investment analyst Daniel Coatsworth. Dan, great to speak with you. The FTSE 100's hit a new intraday high today, and yet there doesn't seem to be a lot of positive news out there. What's driving the gains?
Well, it's three factors driving the FTSE today. We have the weaker pound, which has been driven by fairly gloomy UK retail sales figures, and that builds on some sort of negative news that we've been having in general. Yesterday, we had weaker GDP figures than expected, and of course, people have been worried about the government borrowing more money and how it's going to sort of cope with its bold sort of investment plans. So if you add the weak pound together with chatter about takeover activity in the mining sector, then you add on quite reassuring figures on Chinese GDP, which suggests that this Asian superpower will is still going to be a big sort of driver for commodities demand. If the economy is perhaps holding up, you add all those things together, you've got the sort of the tailwinds that the FTSE is enjoying. That's why we've seen it go to a new record high this morning.
Uh, Dan, could you explain why the weaker pound is good for the FTSE 100?
Yeah, definitely. So you have about three quarters of the FTSE 100, the companies in it, earn their money overseas. A lot of them are earning money in dollars. When you translate those dollars back into pounds, because all their share prices are priced in pounds, it's actually you get a translational benefit. And so you've had investors are sort of keenly watch this, and you typically see on a day when you have a really weak pound, such as we've seen today, you typically see names that do lots of business in America. Whether that's names like Ashted, or you have names that sell goods in dollars. So that's the mining sector. They typically are in demand in these situations. And of course, the pound's been falling for a while, and in further weakness today. So you've got this sort of gradual trend, and you've seen the sort of the FTSE 100 slowly sort of creep up. Now, the performance, yes, it's at record highs today, but of course, this performance, you take a step back, it's nowhere near sort of the returns you've been seeing from the US market. So whilst it's got catchy headlines, it's interesting today. The FTSE, I guess, on a relative basis, is still a laggard versus lots of other parts of the world, particularly the US.
You mentioned merger chatter, Dan, and of course, it's been confirmed that Rio Tinto and Glencore did talk to each other last year, although nothing emerged from those talks. Do you think that M&A activity is still alive in the mining sector?
Oh, absolutely. I mean, parking together Rio Tinto and Glencore, not the most obvious fits. Rio Tinto is quite a cautious business. Glencore is perhaps a bit more gung-ho. Culturally, I don't see them as a good fit. But obviously, last year we had BHP try to buy Anglo American. If you look at the gold sector, we've had quite a few deals over the last few years. And what's happening is that miners they get good times and bad times. During the bad times, they typically think, okay, what can we do to perhaps do a deal that might drive our share price back up? So they look at acquisitions. This sector has a reputation for being addicted to M&A, and I think that they look for to increase their market scale, look for cost efficiencies. We haven't had gigantic sort of big deals involving UK listed miners for, I don't know, 12, 15 years. But the fact when BHP tried to sort of get that trend moving again, and if if it turns out that Glencore and Rio Tinto might still want to sort of see if they could do something together, it does suggest that we're it's boom time again. Of course, when you start thinking about the mining sector, you then sort of turn your attention to the oil sector, and there's been lots of speculation saying, well, look at BP. It would like to have a higher valuation on the stock market. Certainly, look at what value that US listed oil and gas companies get. Might it be interested in a takeover, or could it be a target itself?
Dan, how do you see 2025 playing out for markets and particularly for the FTSE 100? Is that weaker pound going to continue lending support?
Well, I think what you need to think about is obviously Donald Trump returning to the White House. We need to have clarity on what's he going to do with tariffs. Is there going to be a trade war? Because if we suddenly find that he's very aggressive and big tariffs against China, what will that mean for Chinese companies who are perhaps reliant on selling into the US? You've got, and of course, if the economy starts to sort of wobble there and people are losing confidence, that's not a good sign. You've got lots of cost pressures on companies in the UK. Now, whilst obviously, the UK domestic earners are sort of quite small, they're still powerful on there. So if we have, say potential recession in the UK, that's not going to be good for all the house builders, all the banks on the market. I think what we'll see is you're going to have quite a challenging year. It's just going to put a lot more pressure on companies to try and be more efficient, deal with cost pressures, deal with the unknowns. And I think actually, there are pockets of the market, such as utilities and tobacco. These are seen as defensive companies. They could be a bit attracting a bit more interest because arguably, whether the economy is good or bad, these types of companies should see steady demand for their goods. And it's sort of volatile, choppy market conditions that does shine the spotlight back onto these companies. And of course, that would help to give some support to the FTSE 100.
Dan, thank you very much for your insights. Great speaking with you today.
Thank you very much.
That's AJ Bell investment analyst Daniel Coatsworth.